Welcome to Wall Street Week, the show of record for long-term investing. I'm Anthony Scaramucci, along with Maria Bartiromo, host of Mornings with Maria here on the Fox Business Network. Gary Kaminsky will be with us next week.
Yeah, I'm happy to be here this week. A massive and highly sensitive financial document leaked this past week, sending shockwaves from Wall Street to the Kremlin. We're talking about the Panama Papers, a treasure trove of stunning details of the secret personal fortunes of the world's most powerful leaders and those closest to them. Leaders like Russia's Vladimir Putin, at least one head of state snared in the escalating scandal, Iceland's prime minister. He's already stepped down.
With us now is Marathon Asset Management CEO Bruce Richards and Siguler Guff's founding partner, Drew Guff. Drew, let's start with you. Some say that the leaks are great because it's leading to transparency. Others are saying that it's wealth shaming. What's your opinion on the leaks?
I think it's a lot like WikiLeaks. It went both ways. So it scared everybody at government levels because it was an illegal use of information. But for the broader public, people look at it and they say, this is shedding light, this is bringing transparency. Sunlight is the best disinfectant, and so, you know, maybe this will clean up a lot of shadiness in the international financial system.
I use that with my kids, Maria, when they're trying to get them to clean their rooms. Sunlight is the best. But you know Vladimir Putin, is that fair? You've met him a few times.
Well, we've met. And he's, you know, by far the most popular politician in Russia, in Russian modern history since the fall of communism.
Do you think he's one of the richest people in the world?
I know this is going to go against the headlines, but I don't. I think that you will not find Vladimir Putin's identities in any of these Panama Papers, because when you're the most dominant political figure in the country, when you have been for 15 years, and when you have a coterie of other politicians and I guess, you know, you would call them modern boyars in the 18th century in Russia. The court around the Tsar were wealthy merchants, businessmen, noblemen, and that's kind of what we've had since the Yeltsin years, and we still have it today. So that group, it's very internal now in Russia. There have been new laws to bring wealth of politicians who have had apartments in London, New York, etc., back on shore. You cannot serve in the Russian parliament. If you've got assets outside, you have to declare them. So Russia itself has been going through this partly to isolate themselves, partly to not be blindsided by more sanctions. But I think when you're the most popular, powerful politician, you don't have a need for it.
So what does that mean for investing right now? You've got money in emerging markets. I mean, when you look at Russia, given where oil prices are at this point, do you want to put new money to work in Russia or in any of the emerging markets right here?
So we've had a reset in a lot of emerging markets. If you look at the macro top-line numbers, you might look at Russia and Brazil without the labels, and it's a Coke and Pepsi test. So the macro numbers, both are commodity-affected or driven economies, and so what happens to commodities has affected both of them in a macro sense. Both of them have opted with flexible exchange rates. Both of them have opted to let the exchange rate float. Russia, in the case of Russia particularly, they're the only big BRIC market that has no capital controls, never has, and in fact, Vladimir Putin has talked about it often to say this is a point of pride for the Russian economy.
Bruce, at Marathon, are emerging markets a big focus for you? Or
we have an emerging market team, and we do invest in emerging markets on the debt side. And Russia's done all the right things since the sanctions hit and since commodities collapsed. And that's a big part of what they produce, and their economy slipped into recession. And since that's happened, the central bank has taken some very aggressive actions to recapitalize the banks, to make money available, to raise rates to support its currency. And with all of that, Russian bonds have actually tightened from about 8% yields to about 4% yields. Brazil, on the other hand, the leadership isn't quite as strong. There's impeachment proceedings that are commencing now and might lead to new leadership, which there's a lot of political uncertainty there. The car wash and the Petrobras scandal, which will bring down lots of officials, which are yet to be named.
Yeah, a lot of them, which is why I asked you. I'm wondering, do corruption issues matter when it comes to investing? I mean, the emerging markets have begun to come out from under this rock. Do you want to put money in emerging markets today, looking at next 5 years?
Yeah. Well, Brazil last year, their equity market backed up 40%. Peru and Chile backed up 40%. Commodities, we believe, have set a bottom. And so with commodities bottoming and the equities as cheap as they are, money's starting to flow back into these countries. So if you look at Brazil, Chile, Peru, these equity markets are up 10% year to date. If you look at Germany, France, UK, those equity markets are down 10%. So I ask you, Maria, where would you rather have your money this year?
Obviously, you want to go where the value is or where you think the value is if they've seen a big decline.
We have our money in a mattress, Bruce. We just want to give you the heads up on it.
Well, I'm a long-term investor when it comes to
and back to the Panama Papers for just a second. Unlike WikiLeaks, which is a little bit more government official, this is private sector money laundering at the end of the day.
We'll get to more of this right after the break. Guys, stick with us. We'll be right back.